Welcome back to Tax to You, the practical tax channel, where we answer all of your tax related questions. Today I'm going to be showing you how to complete the 22-23 self-assessment tax return if you have rental income from property. To do this, I will cover a walkthrough of how to tailor your return. That means how to set it up for your own personal circumstances. I'll give a demonstration of the entries for rental income, including standard rental income, holiday lets and renter room allowance, and I'm going to give you an explanation of how the tax calculation works. Before we do get into it today though, don't forget to like the video and subscribe to the channel for more helpful tax content. Submit your questions in the comments below and we will endeavour to get them answered either in the form of a reply or possibly a dedicated video just like this one. Check out our website using the link below, because although our aim is always to educate our clients as much as possible and share this information, we understand that tax can be confusing, stressful and time consuming. That's where we can step in and help. Check out the thousands of reviews on Trustpilot from clients who trusted us to do just that. How do we tailor the tax return for rental income? Here we are under the tailor your return section of the return. That's section 3. I have skipped past the welcome and the tell us about you, because that's simply telling you who can use the online tax return service and then confirming your own details, your own national insurance number, your address, so you won't need me for that. And then we're starting on page 1 of 3 of the tailor your return section. So we'll work through the questions here. You can see the tax year is the 22-23 tax year, which covers the 6th of April 2022 through to the 5th of April 2023. Now my government gateway is picking up the fact that I had employment in the tax year, and of course everybody's situation is different. So if you did have employment income or capital gains or whatever it might be, you'll need to declare that alongside your rental income. But for the purposes of today's example, this demonstration, I'm purely going to focus on the rental income element, and I'm going to declare 3 different types of rental income, because hopefully that will cover a broad spectrum and everyone will be able to relate to that. So we'll cover what I would consider normal rental income, renting a residential property on a 6-month tenancy agreement. I'll cover renter room relief, which we'll move on to in a second, and I'll also cover furnished holiday lets as well. So let's start with the first question. Were you an employee or agency worker in the year to April? I'm going to say no, despite the fact that HMRC already know in this example that I was an employee of a company. Was your turnover more than £1,000 from self-employment? Were you in a partnership? A partnership is typically 2 or more self-employed people working together, but they'll normally have a partnership agreement, so you would know if you were in a partnership. And then here, this is the question that relates to property income or rental income, however you want to refer to it. Did you receive income from UK landlord property of more than £1,000? So I'll say yes. Below £1,000, you're covered by an allowance, so you wouldn't actually technically need to declare anything, although there can be situations where you still want to declare below that 1,000. But in this case, I have way more than £1,000 of property income, so I'm going to say yes. And then on to the next tailoring question, which is if you received any foreign income, I'll say no. If you disposed of any chargeable assets, you might need to complete the capital gains section. And you can see all you're doing here, you're just telling them what types of income you had. You're not providing any detail at this point. This is purely setting up the tax return, so you only end up filling out the sections of the return that apply to you. You don't want to be given information about employment and self-employment if you didn't have those types of income. So we can work through this. That's page 1 complete. And then there'll just be different types of income here. So I'm saying no, I didn't receive any interest income. No, I didn't receive any dividends. Did I receive any pensions, annuities or state benefits? No. Just for anyone who does receive universal credit. Universal credit doesn't go in here. A lot of people ask me if this is where they declare their universal credit. No, it's not. You don't declare universal credit on a tax return. It isn't taxable income, so it doesn't need to go anywhere. Did you or your partner get child benefit? If you're a higher earner, if you earn more than £50,000 and you or your partner claim child benefit, then the person who earned the most actually has to start paying back that child benefit, and that's why they're asking you about it here. Did you incorrectly claim an amount of COVID support payments? That's becoming less and less likely at this point. But obviously, if you did accidentally or even fraudulently claim COVID support payments that you weren't entitled to, you can go back and make a declaration and declare that to HMRC to tidy up any fines and penalties, etc., and repay that money. Did you receive any other UK income, for example, employment lump sums? So this is basically anything that didn't fall into those other categories. Have you made any income tax losses? So income tax losses is always a tricky question, but this applies to other UK income. So if you made income tax losses from any other UK income, it's quite rare, I would say. So I'll say no. And then, am I liable to pay any pension savings tax charges? So these apply when you're paying a lot of money into a pension on an annual basis, or maybe you've accumulated a huge amount of money in a pension pot. You start to get taxed pretty heavily on that. So in this example, we won't go into great detail on it, but I'll say no, and I'll move on to page 3 of tailoring my return. Did you make contributions towards a personal pension plan? So there are different types of pension plans. If you're employed, you might pay into your employer's pension scheme, in which case you get tax relief immediately. They take it straight from your salary before you pay any tax, and it goes straight into the pension pot. Okay, so that's how you get your tax relief. If you pay into a personal pension plan, so it's likely that you would have already paid tax on this income. It's sat in your bank account, but you've already had tax deducted on it. You shouldn't have, essentially, if you're paying it into a pension. So what happens is you declare it on a tax return, and then HMRC give you tax relief back. So they give you 20% of your money, or possibly more than that if you're a higher or additional rate taxpayer. But you get your tax relief, but you just get it in a different way. So you would need to declare it if that were the case here. I didn't give any money to charity. Similar kind of situation. Higher earners, higher rate taxpayers, and additional rate taxpayers can potentially get additional tax relief if they're giving money to charity. And did you or your spouse or civil partner, if you were born before 6th of April 1935, do you want to claim the married couples allowance? I'll say no. You'd have to be 80 odd years old, I think, to be able to claim that one. So it's quite unlikely if you're watching this video. Do you want to transfer 10% of your personal allowance? This is the more modern version of married couples allowance. So you used to get additional allowances if you were a married couple. So now the way it works is potentially you can transfer some of your personal allowance to your spouse or civil partner if it benefits you as a couple. So you'd have to sit down and look at your personal circumstances. Typically that happens where you've got one person earning and paying higher rate or additional rate tax, and one person earning or less, or possibly not earning at all. They can transfer some of their allowance to the higher earner, and then you can benefit a little bit. But just remember, you're only transferring 10%, so that'll be £1,257, I think it is at the moment. So not a huge amount of money, but they would potentially get tax relief on that. So you're talking about a couple of £100 tax relief there, so worth looking at. Do you want to claim other tax reliefs and deductions? So again, these are less likely, but if you do want to claim any of these, then you would need to declare so here. Have you paid any 22-23 income tax refunded, or have you had any 22-23 income tax refunded or offset by the job centre? Again, this is not talking about universal credit. It doesn't apply here. Did you have a tax advisor? No, but you would declare it here if you did. Have you used a tax avoidance scheme? I would hope not if you're completing your own tax return, but the funny thing with tax avoidance schemes is they all have a reference number. HMRC actually know about most of them, and you're obliged to declare them to HMRC anyway. So it's almost rubbing it in their face. You kind of have to tell them, hey, this is how I avoided tax from you. They then go away and continue investigating that scheme. They end up taking you to court, and then they win about 9 out of 10 cases it's supposed to be. So tax avoidance schemes aren't actually as effective as you might think, but it's very unlikely that you're actually using one. Are you acting in capacity on behalf of someone else? You're most likely completing your own return, but if you are completing on behalf of someone else, you can let them know that at the bottom here. And then that, if I save and continue, that is our return tailored. It's set up for our personal circumstances. So if I did have employment income or self-employment income and I told them about it, you'd get a section in here. In this example, I've only told them that I have property income. So you can see it's generated the UK property income section here. And then below that, everything else are just the standard questions that everybody will need to answer on a tax return, whether you have self-employed income or rental income, it doesn't matter. These are standard and everyone will have to go through them. Now, if this does seem like too much hassle, or maybe you need some assistance with your tax return, don't forget to check us out using the link below. Our prices start from £50 plus VAT for a basic self-assessment, which includes one of our accountants preparing and submitting your tax return to HMRC. You can book this via our website using the link below. Now let's move on to completing the property income section of the tax return. So here we are, we've tailored our return, we've completed section 3 on the right hand side here, and now we need to actually fill in the return. Like I said, we're only declaring property income, so we've only got the one section to complete, but what we're going to do, we're going to input some numbers for what I would consider standard rental properties, your 6-month tenancy agreement, residential property that lots of people have. We'll do a rent-a-room relief, which covers rooms let in your own property, and then we'll do a furnished holiday let as well. Okay, so we've got 3 types of rental income that we're going to declare under the property income section. So let's scroll down and you can see some sections have already been entered. The first section that hasn't is UK property, and I'll start by clicking the link to enter property details. And we'll start by telling them what type of property income we had. Like I said, there are multiple different types and sources of property income, so we just need to work through the questions. Again, we're looking at the 6th of April 2022 to the 5th of April 2023. Do you want to claim rent-a-room relief? So I said I'd give this example, so I'll say yes. Rent-a-room relief typically applies to individuals. It can potentially apply to a business like a B&B as well. It's up to £7,500. You can see that below here. And it applies in situations where you are renting a room or multiple rooms within your own home. The criteria are normally that it needs to be furnished and it cannot be self-contained. So you couldn't have an annex or one-bed apartment attached to your property that's completely self-contained and claim this allowance. But if you're sharing facilities with that person and they just rent a bedroom upstairs, then potentially you can claim up to £7,500 tax-free. So it's a pretty generous allowance. If you're splitting that income with someone else, if you're letting jointly, then it's split and you get £3,750 per person. But yeah, considerable allowance and good if you do qualify for this, but it does replace your expenses. And you can see here, you've got a bit more information if you do need some additional info on rent-a-room relief. It would replace any expenses or anything that you did have for your property. So I'll say yes to that one. In that example, we'll assume that I have more than £7,500 of rent-a-room. So if yes, did you receive rents of £7,500 or less? So if I say yes, it's less than £7,500, they won't ask me for any more information on it. It's just a case of telling them there. But I'll say no. So I'm going to say that I had 10,000 or 11,000 from rent-a-room. I'm going to claim the 7,500, and then I'll just pay tax on the excess, so 2,500 or 3,500 excess. And I'll show you how to do that in a second. How many properties did you rent out? So for this, I would always include my rent-a-room property, because I am renting out a room in that property. I would include my furnished holiday let, and then I would include my, in this case, I'm saying that I've got one residential property that I let out, my standard, my normal rental property. So I'm going to say 3, but of course, that's down to your own situation. Do you have any income from property let jointly? So if you are sharing income, if you do own property jointly, then you'll normally split that income across multiple tax returns or for multiple people. Just so you know, if you are married or in a civil partnership and you own a property together, even if your property is technically owned 80-20, maybe you only paid 20% and your partner paid 80% for the property, you still, as standard, you would split the income 50-50. That's what HMRC expect. If you're married or in a civil partnership, you can make a declaration to HMRC to split it in a different way back to your 80-20, but there's a form that you would need to submit until to do that, and until you've submitted that form, they would be expecting it to be split 50-50. Okay, I'll say no to that one. Did all property income cease in the tax year? So if I'd sold my property, then potentially I wouldn't have this income next year, so I can tell them that here, but you can see they're reminding me that, hey, if you've got rid of your property, maybe you need to complete the capital gains summary. Maybe you've made money on that and you'll need to pay capital gains tax. So I'm saying no, it didn't cease, but it is useful because if you do say yes, they won't be expecting you to submit information next year because you've clearly told them here. So next question, did you receive income from UK furnished holiday lets? I'm including this in my example below. We've got a bit more detail. There are criteria to being classified as a furnished holiday let. There are also benefits, which we'll come on to, but the criteria: you need to make the property available for holiday letting on a commercial basis for 210 days or more during the tax year, and you need to actually let it commercially as a holiday let for 105 days or more during the tax year. So making it available could be listing it on Airbnb or booking.com. Actually letting it, obviously you've got to take actual bookings for it, and you'll notice they put the word commercially in there, so you need to be doing it for a profit. So if I get to the end of the tax year and I've only actually let it for 100 days and I say to my friend, go and stay in my holiday let for a week so I meet the criteria, that's not commercial. Commercial is trying to make money from it, so I need to charge them market rent for it. I need to take that money from them, so you can't really get around this one, unfortunately. If you do meet those criteria though, then you can say yes to being a furnished holiday let. And then the last one is, did you receive income from EEA furnished holiday letting? So again, furnished holiday let, similar criteria, all below here. But EEA is a European Economic Area, so you can look up the list. I think HMRC do provide you a list in here in their help sheet of countries that fall within the EEA. It's most of Europe. But what you'll need to do, if you do have, say, a property in the UK and a property in Spain, you need to split those. You can't call that all one furnished holiday let business. It would be two in the eyes of HMRC. I'm not going to declare any income from EEA furnished holiday lets. I'll save and continue. And now we're on to, that's kind of a mini tailoring for the property income section. Now we're on to actually entering some figures into that section. So we got, to start with, we've got our UK furnished holiday let income. That's what HMRC want to start with here. So income from our furnished holiday lettings. So if I had 10,000 of income, but I also charged £1,000, let's say, for cleaning of my furnished holiday lets, then I need to enter all of that income. It says amount of rent and any income from services provided. So I would enter my 10,000 plus my 1,000 in here, so it's actually 11,000 of income. Property income allowance. So to explain this one, property income allowance is £1,000 or up to £1,000. You can't create a loss with it, and it would replace any expenses. So let's say I only had £500 of income here. I can't create a loss, and it's up to £1,000. So I could input 500 and that'll bring me down to zero profit, but I can't input 1,000. It wouldn't let me do that. So you are limited there. So if I go back to my original numbers, £11,000 of income, I can input £1,000 here and it would bring me down to £10,000 profit. However, you cannot claim expenses, and this replaces your expenses. So if I only had £500 of expenses, great, I'm happy to replace this with the £1,000 figure because it's going to reduce my profit and I'll pay less tax. If I've got more than £1,000 of expenses, then I don't want to use that. I want to claim the actual expenses. Okay, so just bear that in mind, and you have to do your own little calculation there. Did you use traditional accounting rather than the cash basis to calculate your income and expenses? So cash basis is a simplified way of accounting. So you only account for your income and your expenses as the money is actually spent or actually received. So if you think about it, if at the end of a tax year, the last week of the tax year, I let out my furnished holiday let, but the person hasn't paid me yet, I gave them a bit of credit and they're going to pay me in a week's time, then under the cash basis, I haven't received that money. So I don't declare it to HMRC and I won't pay any tax on it. But under traditional accounting, I know I've let out that property, I know I'm due that money, so I would need to declare it. Okay, and it works the same with expenses as well. So did I use traditional accounting? I'm going to say no, because I'm using the cash basis. Just be warned, there are some criteria. Again, all your criteria can be found in here. So you can only have income up to 150,000 from your furnished holiday lets to qualify for the cash basis. Otherwise you'll be forced onto traditional accounting. Now we're on to declaring expenses for our furnished holiday let. So I'm going to input some figures here. So if you're looking for a category that fits well, okay, so don't overthink it. At the bottom you're provided with an other category. So if I did have some insurance, I might put some insurance costs in here. If I had loan and other financial costs, so loan interest, let's say 5,000, legal fees, accountancy fees, £1,000. If I can't find a category, then I can just put it in down the bottom here. So don't panic, you can always use that one. Now I will come back to this one, loan interest and other financial costs. So for UK furnished holiday lets, or furnished holiday lets in general, your financing costs are allowable, 100% allowable. So these will get deducted, that £5,000 will get deducted off my £11,000 of income and it will reduce my profit figure. You get tax relief at whatever rate of tax you pay as a taxpayer. If I'm a 20% rate taxpayer, if I'm a 40%, 45%, you get the tax relief immediately and effectively it will apply to the highest rate of tax that you pay. Okay, that is different for your standard holiday lets, your standard rental properties that we'll come onto in a minute. But for the purposes of a UK furnished holiday let, it's 100% allowable and you'll get that tax relief at the highest rate of tax that you pay as an individual. Below that, we've then got private use adjustment. So if up here I'm saying that I've got 1,000, 6,000, 7,000, £7,500 of expenses for the year, if I lived or I used my furnished holiday let for 10% of the year, I would need to disallow 10% of that income. I can't claim it if I'm using it privately, personally, so I'd need to put £750 in here and they would deduct that off of my expense figure. Okay, so that 750 wouldn't be allowed anymore. Balancing charges, electric charge point allowance, zero emission charge car allowance, and then other capital allowance. These all relate to capital allowances. So where you own assets within your furnished holiday let business and you dispose of those assets, or potentially you buy new assets like electric charge points, you might be able to claim the full amount in the first year of trading. You might have to spread the cost of those assets over multiple years. It gets a little bit more complicated, so I'm not going to go into great detail on it, but all of these relate to owning assets, disposing of assets, buying new assets into your property business. At the bottom, we're then provided with a profit figure, £4,250. That's my 11,000 at the top, minus the expenses that I've declared here, is my profit figure of 4,250. Losses brought forward used against this year's profit. So if I made a loss in a prior year, I can use it against this year's profit. So first example, let's go through if you had, let's say, £5,000 loss in the prior year, which I now want to use. So I've got £4,250 of profit here. So I could enter in here 4,250, which will bring my profit figure down to 0. On the next page, I can then carry forward again my 750 that remains from that 5,000. Okay, and then in the next year I would do the same. I would offset that 750 against any future profits. In this example, I'm going to say that, do you know what, I only had £1,000 loss last year. So if I take this out completely, I'm back to my 4,250. If I had £1,000 last year, which I declared to HMRC as a loss, it brings my profit down to 3,250. Okay, so that's how your losses work. You need to make sure you're declaring them, carrying them forward, and then utilising them as soon as possible. I'm not going to carry forward any loss because I only had £1,000 to use. Do you want to make a period of grace election? Period of grace election, again, details below, but essentially if I qualified as a furnished holiday let, I met the criteria of 210 days available, 105 days actually let in the prior tax year, but I didn't in this tax year, then I can make a period of grace election and they'll give me those benefits. They'll continue to consider me as a furnished holiday let, even though I didn't meet the criteria this year. You can only do it for 1 year, but you'll get that benefit of being able to claim tax relief on your financing costs. So it's worth claiming if you can. In this case, I'll say no. You can imagine that was really, really useful in COVID, for example, when people couldn't let out their properties. They didn't lose their status as a furnished holiday let. Save and continue. And now we're looking at details for other property income. So we've done our furnished holiday let and we're left with the rental income, the standard rental income, 6-month tenancy agreement, normal rental property, and then my renter room. I'm renting a room in my own property. So we're kind of going to have to combine those together here. And I want to provide a figure for my total rent. So let's say let's go with a higher figure actually. Let's say I had £30,000 because that's going to mean we're going to have tax payable at the end. We already know about the property income allowance. Okay, you only get one property income allowance, so if you're utilising it elsewhere, you wouldn't be able to utilise it here as well, and you only get one per person as well. So I'll leave that one blank. Did you use traditional accounting? Again, I'm using the cash basis. My turnover is less than 150,000, so I'm going to qualify for cash basis. So I'll say no to traditional accounting. UK tax taking off total rents and other income from property. This only applies to non-UK landlords. So if you own property in the UK but you live abroad, quite often what happens is your agents look after the property, or your tenant will be told by HMRC that they have to deduct they have to deduct tax from your rent before they pay it across to you. So let's say I own a property in the UK, but I'm living overseas. I rent it out for £1,000 a month. My tenant might be told, hey, don't pay him £1,000 a month. Pay him 800, pay him 750, and pay the remainder across to us at HMRC. So if you don't know that happens, it does happen, and it happens when you live outside of the UK but own property in the UK, non-UK resident landlords. I'll leave that one blank, but they would declare any tax that's already been deducted here. Premiums for the grant of a lease. So if you own the freehold for a property, potentially you could sell off the leasehold, gain a premium for that, and you'd have to declare that income here. So it's a different type of property income. Reverse premiums. So reverse premiums, if I took an interest in a property and they paid me for taking that interest, I don't know any situations where I've known that to happen, but I guess it would be quite rare if you're completing your own tax return, but those are different types of property income that you could have here and you would declare here. So I've got my £30,000 of income from property, my two other types of property income, and then we're on to declaring expenses again. So again, you're just looking for a category that fits your expense type. Repairs and maintenance, insurance, ground rents. You're going to plug in your figures from here. Non-residential property finance costs. So this would be for commercial property that it would go in here. So potentially, again, that would be allowable, the financing costs for commercial property. But in this case, I don't have any commercial property, so I'll leave that blank. Legal fees, you could have some accountancy fees that go in here, management fees or charges. Cost of services provided, including wages, I'll leave that one blank. And then we've got our useful other section at the bottom if you don't know where to put those expenses. So I've got a total of £5,000 of property expenses. Now, those property expenses, because I've combined rental income from my standard property let and then my renter room, these expenses have to relate to my standard property let. They cannot relate to my renter room because I'm already claiming renter room allowance on those. The other option would be actually if you had more than £7,500 of expenses for your renter room, you could potentially not claim that allowance and claim the expenses instead in the same way that we've done here. But in my example, I don't have any expenses under the renter room, so I'm going to claim the allowance instead. Save and continue. Adjustments to property income. So again here, what you'll see, these all relate to capital allowances. So if you own assets within your business, well, you might have to make a private use adjustment first of all, but then everything below that relates to capital allowances. So again, we're not going to go into great detail on capital allowances here, but the question at the bottom we do want, because this is where you claim your renter room exempt amount. So what I'm saying is I've got 30 grand of income. Now that might be 20 grand from my standard property let, it might be 10 grand from my renter room. So I'm going to claim the full 7,500, and what would happen is the excess, that 2,500, would then be taxable. But I'll get 7,500 tax-free, so really generous allowance. Save and continue, and you can see my adjusted profit for the year is £17,500. Now that makes sense. I've got 30 grand of income, I've got 5 grand of expenses, and I've got 7.5 grand of renter room allowance, which brings me down to 17,500. Losses brought forward. We've actually been through this on the furnished holiday let example. I don't have any in this case. And then loss set off against 22-23 total income. This is rare. Even HMRC are telling you this would be unusual, so very unlikely, but they'll tell you in here it normally relates to certain agricultural expenses. It's not usually going to apply. My loss to carry forward, I don't have any losses to carry forward, so that I would expect that to be 0. And then we have a small section on residential property finance costs. So if you think back to our furnished holiday let example, it was very straightforward. If I spent 5 grand on financing costs on a mortgage for that furnished holiday let, I just claimed it as an expense. And if I paid 20, 40, 45% tax, I would get 20, 40 or 45% tax relief on those expenses. If for my other rental properties, I have financing costs like mortgages, like loans, it works in a different way. So let's say I have £5,000 of financing costs, mortgage interest. In that situation, let's say my tax bill at the end of the year is £2,000. Okay, what HMRC would do is they would do a quick check to make sure you qualify, and then they would say, okay, you're going to get a tax reducer on this, and a tax reducer is at the basic rate of tax. So they would say, what's 20% of £5,000? It's £1,000. What's going to happen is instead of paying £2,000 tax, you're going to pay £1,000 tax. Okay, so you're getting tax relief, but you're limited. You're only getting it at 20%, which is the basic rate of tax. Now, if that's the highest rate of tax that you pay, it's the same thing. It's the same whether you claim it as an allowable expense or whether you claim it as a tax reducer here. But the people that lose out are higher rate and additional rate taxpayers. If you normally pay 40 or 45% tax, you're still only going to get basic rate tax relief here. So it's a bit of a kick in the teeth to higher and additional rate taxpayers, but that's how it works now. The box below that, unused residential property finance costs. Now let's say I only had a profit of £500 in this year, okay, and I want to claim tax relief for these residential property costs. So £5,000, 20% of that is £1,000. So I can't use the full amount. I would only be able to use 2,500, and I'd have to carry the other 2,500 forward. Okay, and then you can use that in future years. In this case, I'm going to have much more tax to pay because of the amount of profits. So I'm going to claim the full 5,000 here, and like I say, I'll get that tax reducer. Save and continue. Any other information for other property income? So if you did have supporting information or notes maybe that would help HMRC if they were to review your return, you can provide them here, or you can leave it blank. And then we've got a bit of a summary here. So you can see EEA furnished holiday lets has been left blank in the middle, but I do have my UK furnished holiday lets. I have £4,250 profit, but I'm utilising a loss from the prior year, leaving me with £3,250 that I'll pay tax on. And for my renter room and for my other or my standard property let, I've got 30 grand of income, 5 grand of expenses, 7,500 of renter room allowance, leaving me with 17,500 that I'm going to pay tax on. Okay, save and continue. Now we're on to the tailoring or the standard questions that everybody's going to have to answer. These won't necessarily relate to the property income section, so I'm going to go through these at a bit of speed. Essentially here you're just declaring that this figure is correct. Do I have any underpaid tax from earlier years? Is this figure correct? 0. Yes, I don't have any underpaid tax. Similar question again. Yes, I'm happy that this is correct. Check your dates, check your coding notices. And then this one, I'm confirming that, or I'm entering a 0 here, if the amount of outstanding debt included in my tax code for 22-23, there was no outstanding debt in my tax code, you would know from looking at your coding notice. But if there's nothing, you can enter 0. Overpaid tax. Now, I'm not going to have overpaid tax. I'm going to have a tax liability. So I'm going to say not applicable. But you can select to have your overpaid tax paid to someone else or back to yourself. Continue, and you'll be able to input your bank details. You can tell them you don't have bank details and they'll send you a check if you really want one. But I'll say this is not applicable because I'm not going to get a tax refund. If you're submitting your tax return by the 30th of December and you owe less than 3 grand, again, I don't think that will apply to my example. You can have your tax collected by this year's tax code. Okay, I'm going to say no to that. I don't want it to be collected via my tax code. And then again at the bottom, if you're likely to owe tax for the current tax year, not the tax return that we're submitting here, the current tax year, then you can also have that reflected in your tax code as well. So I'll say no to those and I'll continue. Adjustments. Adjustments are very rare at this point. I can't think of an example after submitting thousands of tax returns where I've actually had to do this. It does become a bit complicated. If you don't have any adjustments, you just leave them blank, which is very likely, and you continue. Any other information. So at this point, this is general information relating to your tax return. Doesn't have to relate to property income section, but you can provide additional information. First of all, they're asking us, does this return contain provisional figures? Provisional figures, if you don't have information and you're approaching the deadline, sometimes it's better to just submit something, an estimate to HMRC, but they would be expecting you to come back and make a correction. And I believe if you say yes, you'll actually have to tell them when you're going to come back and why you're using a provisional figure. I'm going to say no, these are final figures, I'm happy with them. And then I've got a bit of white space. Again, general information and attachments below. Do I want to attach anything? You can do that would support your tax return and the figures on it. Save and continue, and we've actually completed the tax return there. We've completed the property income section and all of those standard questions that you'll have to answer, and you can just check here that everything has been completed. You'll have the blue entered label next to it if that is the case. Now just remember, what we've demonstrated here is how to enter income details of property income figures to your tax return. To get to this point, of course, you need to work through all of your receipts, all of your bank statements, and you need to decide which income needs declaring, which expenses are allowable and which are not. Of course, that in itself can be difficult. So if you want one of our agents to help you with this, you can book via the link below, then simply scan or send photos of your receipts and we'll take care of the rest. We'll also be able to advise if there are any additional expenses or allowances that you should be claiming to further reduce your tax bill. Again, follow the link below for details. Now, let's take a look at the tax calculation. Now, in order to move on to view your calculation, you can either do this on the right hand side by clicking on number 6, view your calculation, or once you've finished checking that all of these have been completed, and you can drop back into any sections you're unsure about. Once you finish, you can click next at the bottom, and we're on to the summary page of the calculation. Now, this is telling me the total amount due for the 22-23 tax year, the one that we were looking at, is £636. It's also telling me that I have 0 to make as a payment on account for the following tax year. Payments on account will normally apply if your tax liability is more than £1,000. So if this figure was, let's say, £2,000, HMRC would ask me to make payments on account as well. And your payment on account is always going to be 50% of the liability up here. So I'd have to pay £1,000 here, and down here by July as well, they'd put £1,000 in. So in this case, because my liability is below £1,000, they're not worried about any payments on account. So that's the full amount owing by the 31st of January 2024. Now, to see a detailed breakdown of this, because that doesn't tell you how your tax has actually been calculated, a detailed breakdown, at the bottom you can click on view and print your full calculation. So this is the detailed calculation where we can see a breakdown of all the different types of income. If you did have other types of income, employment income, self-employed income, capital gains, it would all show in here. And then you'd get a breakdown of any income tax that you have to pay, but also national insurance on certain types of income, earned income normally. So typically that's going to be your employed income would be the best example, self-employed income as well. In my example, I've only got the property income, so you can see total property income 21,750. You can see my £1,000 loss. I'm getting income tax relief on my £1,000 loss that was being brought forward. I've got a personal allowance of 12,570, gives me relief of 13,570, and then I've got income tax to pay on £8,180. Now, because I've only got that income here, that's going to fall in the basic rate tax category, so I'm going to pay 20% tax. If you were a higher rate taxpayer, you had more income from rental property or other sources, then you might have to pay additional rates of tax here. And then you can see here I have total income tax due of £1,636, but this is my tax reducer. HMRC are saying, well, you paid £5,000 of financing costs, you can have basic rate tax relief on that, which means you get £1,000 of tax relief. That's why I'm only paying £636 in tax. And again, you've got your breakdown of when you'll need to make those payments below. You can print this calculation if you want to. I'm also presented with the option of saving and printing the full return here, although I never normally print the return at this point because you'll always have access to it as you log back into your government gateway account. You'll have to make a declaration before you submit your return that you are happy that you've declared all COVID support payments and that all the information on your return is accurate to the best of your knowledge. And from there, you can then submit by clicking submit and entering your government gateway ID and your password again. So that was how to complete the property income section of the self-assessment tax return. Hopefully, after viewing this video, you should now be able to tailor your tax return so it is set up for your personal circumstances, in particular where you have property income. You should also be able to complete the property income pages of the tax return, and hopefully you will understand more about how the tax calculation works. Don't forget, if you're having any trouble at Tax2You, we provide an easy to use self-assessment service and we'll be happy to help whatever your situation. Just follow the link below. That is all for today. Don't forget to check us out at tax2you.co.uk and subscribe to the channel for more helpful tax content. Thank you for watching. See you next time.